Did you know you can get a copy of the Edge Finder completely free with our sponsor, 8cap? 8cap is a super well-known brokerage that has been in the game of CFDs for a long time. And if you are interested in switching your brokerage to 8cap, they can actually purchase a copy of Edge Finder on your behalf, making it completely free for you. This is an offer our team has worked out to make the Edge Finder a completely free to access tool if you move over your account to 8cap. Here's how this works. It's pretty straightforward. If you head over to our website, a1trading.com/8cap, you can explore this offer in more details, including all the terms and conditions. But basically, the high level idea is if you create an account through that specific page and you meet the deposit requirements, 8cap will effectively buy a copy of Edge Finder for you. Now, please note this is unavailable to US traders, but for my friends outside the United States who trade CFDs and you like the brokerage 8cap after exploring it on this page that is linked below, then maybe you consider taking advantage of this offer. We've had a lot of people do this and it makes the Edge Finder completely free, which is a hard price to beat, by the way. It doesn't get much better than free. And it's a win-win-win. 8cap gets a new client, you get a great brokerage, as well as access to our software, as well as other stuff on that page. You can get access to free memberships with us, Stockbox, etc. at no cost to you. You just move over your trading to 8cap. So the full details and terms and conditions can be found on this landing page, again, linked in the live stream chat or in the description down below. Please also make sure to do your due diligence to make sure that 8cap is a good fit for your trading and meets all your criteria for what you're looking for in a brokerage. On this landing page, you can explore the different product offerings that you get access to from our store completely free if you deposit certain tiers within this list. And the cool thing about this multifaceted offer is that even if you have a lower capital basis, why not move your account over if you like the brokerage, you like what you see there, and get something for free out of it. I think this is a really cool offer that they've set up with us, and it is sort of a co-branded offer by 8cap sponsoring A1 Trading. So check them out. Again, all the information can be found on that landing page, a1trading.com/8cap, or found in the description or live stream chat below. Thanks to 8cap for sponsoring. Now back to the stream. Hey everyone, good morning. Welcome back to another live stream. Happy Monday to you. I hope you are all doing well. Hope you had a nice weekend, and I hope you're ready for another week in these crazy markets. We've got a lot of stuff coming this week. I hope you guys are ready. You've got PMI data dropping. You have the NFP report at the end of the week. The AI story continues to be an interesting one to follow. And meanwhile, I have this really unpopular opinion that I think stocks are due for a pullback. Why do I say unpopular? Well, I made on my video yesterday, I talked about how I actually think that there is some downside coming for the S&P 500. Granted, I clarified that I'm not looking to just short here and now, but rather that if structure actually starts to fade and break on the S&P 500, that I am actually looking for further downside and looking for a larger scale pullback. I'm not betting on a crash, or I'm not shorting at the all-time highs. I'm looking for structural weakness to take place in the indices. And if that takes place, then I actually may be looking to take calculated short positions, specifically on like the 4-hour chart. It's going to be an interesting week to see if any weakness comes in. I mean, this has been 9 weeks in a row, guys. 9 weeks in a row. Now, I've not been betting against this. I've not been trying to fight this. I'm just pointing out that I do think that there are some macro reasons why stocks look a little bit unattractive to me. And if price action starts to confirm my bias there, I do have an interest in potentially betting against the stock market rally, which is not something that I do very often. And I need to keep saying this because people are like, Nick, why you want to short here? I don't want to short here. I am looking for, like I said, structural weakness, failure at support, a change in nature on this chart, and then I potentially would look at shorting the stock market. Hey, bro, can you do fundamental analysis for Forex? Of course. We do that every day here on the channel. If you're new, thank you for being here. Hit that thumbs up button, subscribe, all that good stuff. Euro's going to 1.16. What is Euro at today? Euro is 1.16. So you're thinking some more downside here in the Euro. Very interesting. What's up, Angelo? Good to see you here, my friend. Hey, Nick, could you elaborate on the significance of ISMs and are PMIs similar? They both feature in this week's data releases. Yeah, so the ISM manufacturing and services PMI numbers are huge. Lee, do you have Edgefinder? I feel like we talked about this before. You're like an everyday stream viewer. You talked about this one time before. I can't remember if you ended up getting it during, a sale event or something. But anyways, PMIs this week, huge, okay? Because right now, economic growth, and I should clarify with my posture in stocks, it is subject to change. If PMIs rock this week, so these are ISM manufacturing and services PMI numbers. If you have some really good numbers this week, then I'm going to abandon the idea of potentially shorting. But my concern here is that economic growth has been really weak for the US. And if that persists, if we see further weakness in the economic growth metrics, then I'm going to watch it close, right? So this last time around, what this index shows is forecasted growth in the US economy, specifically in services or in manufacturing parts of the economy. Now, a reading over 50 is growth. A reading under 50 is contraction. However, we don't just look at the nominal 50. We look at what forecasts are for versus what the actual numbers come out to be, okay? So in the last round of economic data, we had weaker than anticipated PMI numbers. The surprise was negative, right? So that impacted negatively to the dollar and to stocks. One of the concerns that I have right now is that you have slowdown in the economy big time outside of the AI data center stuff. That stuff is huge. It's exciting. The market is very, very much kind of rushing into that part. That's where all the growth seems to be coming from right now in the US economy. And you can see this when we compare, right, economic strength across US versus other places. Notice how GDP is much stronger in the US than other places. It's because the US is the center for AI, right? Data center build out, all that excitement. It is spurring up massive amounts of spending and infrastructure build out in the United States. Now, that story, if you believe in it, then that might suggest you stay more bullish on things like the dollar and US stocks, right? So I just thought that was worth mentioning. That is a huge component as to why the GDP number in the United States is strong compared to the rest, is the AI data center build out is a huge component. Now, why that also matters is that if the data center build out in any way slows, it's a story that could be problematic for US stocks to a dramatic capacity. And it also could be bearish to the dollar. But right now, we don't have any significant evidence of that AI data center build out slowing. We see a lot of money pouring in every single week. It seems like you've got more excitement around that. So the dollar index specifically, I am looking for a breakout here above the 99.3 level. I am still long the US dollar. I am short the British pound versus the US dollar. That is a trade that I still have actively going right now. British pound versus US dollar. So a stronger dollar, how does this impact stocks? Well, I think right now you're entering into an environment where inflation stays sticky. And we got to keep a close eye on growth. This strength in the dollar is also putting some bearish pressure on gold. So if you're watching gold here, we did reject very sharply this 45.70 level. Now, if you remember, I got stopped out of my gold trade on Friday. Now it has returned back. And the question I've gotten a lot over the weekend is, Nick, are you going to short gold again? And for me right now, the answer is no, but I want to show you why and what would need to change for me to actually take a short position. So I'm looking at gold here. Gold is back to neutral. Pretty quick, we snapped back to a neutral score. So I do not have an interest in shorting it at this moment. If we get, for example, really strong PMI numbers this week, and let's say strong jobs numbers this week, then we could potentially see another short setup form for my trading in gold. So I'm watching gold this week. I'd like to see what happens with price action here. Again, kind of faked me out here because, of course, I got short Price rallied rallied against me. I got stopped out of the trade, and then we kind of made our way up to this next level and respected structure really well. We didn't respect this structure, but we did seem to find sellers here. So I'm open-minded, but right now I'm going to watch and wait and see what happens with Edgefinder scoring on gold. So I hope that clarifies there. Let's also take a look at Bitcoin. So Bitcoin's been a bearish idea for a while on Edgefinder. Look at Bitcoin today, guys. Bitcoin taking out the lows. I'm not sure if anyone here is short Bitcoin, but this has been one we've talked about on the channel quite a bit. This idea of being bearish Bitcoin. Look at this, right? You had the breakout below significant structure, prior lows on the 4-hour, and you're repeating it here. Fresh lows coming in on this Monday morning. Very, very interesting. How's the digital economy really calculated in GDP? Services, yes. Yeah, the US is a service-based economy, which is a lot of internet stuff, a lot of software, a lot of, I mean, services are not just digital, but they also can be digital, right? Pound dollar dumping. Yeah, we're going to see if we can get something going on this short position I've been sitting in. So I am short pound dollar. I've been stuck in this trade. I mean, I'm not in a rush to get out of it one way or the other, but it's really gone nowhere. I am looking for pound dollar to continue lower. I do still have the bearish reading on British pound here. This has been a pretty clear signal recently in Edgefinder. Pound dollar's been getting a pretty negative read overall. We've got British pound getting a bearish -7 score here. And I do think that there is follow through, potential downside here coming in on pound. Nick, let's talk more about options. Ray Beast, that's for the other channel, my friend. I don't talk very much about options on here. Trust me, I love trading and talking all about options. However, this channel is more about, you know, as we've discussed previously, Forex, commodities, indices, etc. I've been short Bitcoin for a while, thanks to the Edgefinder. Danielle, my friend, I am jealous of you. Man, I've had a little bit of a tough streak here, guys. I gotta come clean. I've had a couple really good ideas that I've just narrowly missed. I was watching on Friday for the short entry on Bitcoin, missed it, just shallow. But hey, if other people are catching it, that's awesome too. Congrats to anyone who caught that. It was like the cleanest, it was one of my cleanest setups last week, was looking for Bitcoin shorts. And my goodness, it has delivered. Fundamentals, high inflation, low growth, mediocre jobs data, no bueno for Bitcoin. Let's face it, that is an environment that is not particularly sweet. And I have to say that does extend to stocks. So while there's a lot of hype, I think that when you're looking at stocks here, right, stocks are up largely. Let's talk about this. Why are stocks up and Bitcoin's not? Bitcoin's down. Bitcoin's getting nailed. Why? Why are stocks just never ending melt up and Bitcoin is struggling? Well, here's why. I know it's getting annoying, but it is the reason. AI data center stuff is absolutely fueling stocks. There's so much excitement. There's so much spending. How does that impact Bitcoin? Well, if anything, people are worried that stronger AI is going to crack the code on Bitcoin and hack everyone's Bitcoins and make them lose all their money. Big AI doesn't seem like a very good tailwind for Bitcoin. Not to mention, you know what else is really not great about AI? All the data center stuff is hogging the power grid, right? Making Bitcoin mining even more expensive. Maybe is that a bullish thing or a bearish thing? I don't know. I'm not a Bitcoin specialist. However, from a risk on, risk off perspective, Bitcoin, I think, is actually being a little bit more reflective of the pure kind of state of the consumer, if you will. Look at the weekly, right? This thing is in a massive downtrend and has been seeing a lot of pain. Bitcoin this week, by the way, still on the radar from a daily chart perspective. If you do get a bounce in the coming week or two, there may still be an opportunity that I could see shorting Bitcoin, joining the short. So I'm watching it. I had a sell limit that also just got missed. Yeah, we're in pain together. I was very much ready to short Bitcoin on Friday. Just didn't quite get to my level. And at the end of the day, you can't be bitter about it. You can't dwell on it. You just say, hey, wait for the next setup. Look for the next setup. Be ready. Be nimble. Don't be, You can't be bitter. You can't sit there and like gold is coming back down here today after I got shorted or I got short and got stopped out. 10 years ago, that would have drove me crazy when I first got into trading. But now it's like, okay, you just move on. You just find the next setup. If you're a gold bull, by the way, you're watching this level, I think, today. 44.70, let's call it. Do you get a bounce? Like, do we hold and put in some sort of higher low? Or do you fail? And maybe this was all sort of like one kind of last ditch rally before you maybe take out the lows. So yeah, we will continue to watch gold. I do have a bit of a neutral stance. However, I do still have, let me just check dollar. Okay, dollar has also gone pretty flat here in score. Really interesting. The trend flipping a little bit here. I'm very curious if you're watching dollar here today to see how we can hold. I mean, we've gone into a sideways range. So I think that the downtrend call is a little incorrect, but we'll see. We'll see. Anyways, dollar, if you're watching it, if you can see this price action to the upside, then I think we'll get a much stronger reading with an edge finder. So we will see. Bitcoin seasonality positive in the next few months. Yeah, the challenge with it is Bitcoin seasonality. First of all, it's a very thinly populated seasonality chart. It's only been, you know, what, 15 years of Bitcoin history. S&P 500 is joining into a strong period of time in previous 10-year period. If we take a look at Bitcoin, we can take a look at seasonality here, study this, and you're right. We do have a general uptrend for Bitcoin during this time of year. And Bitcoin's kind of been following seasonality, sort of, but it's really had a fall off here this year. But to be fair, Bitcoin seasonality has been okay, right? You've kind of matched seasonality. So maybe that suggests, to your point, Rabies, maybe Bitcoin has a little bit of upside here. Though, again, there is a big disclaimer with this. The last 10 years have obviously been phenomenal for Bitcoin, but Bitcoin doesn't have that much trade history compared to something like S&P, been around for 100 years or whatever, right? So, it's only ever existed. This is my biggest concern with Bitcoin. I'm not a permanent bear by any means on Bitcoin. However, my biggest concern with Bitcoin is that for people who love and hold Bitcoin, the one giant question for Bitcoin is what happens when you have an actual recession, like an actual downturn. What happens? We have never seen it. You don't have an answer. I don't have an answer because Bitcoin didn't exist during a major recession. You might say, well, what about 2022? No. 2020? No, those are not recessions that led to multi-years down 40% in the S&P 500, like a 2000 or a 2008. 2020 was the start of one, and then we saw the whole market kind of get ripped higher by stimulus checks getting printed, the Fed just printing $1 bajillion, and it worked. In 2008, they tried that and it did not work. There was a financial crisis, the structural issues that had to get, repaired over the next decades. So my concern with Bitcoin, like long-term, is like, what happens in another 2008? I'm not saying I think we have a 2008 around the corner, but if we did, what happens to Bitcoin? Down 99%? If you're going off of past stock markets drop 20%, Bitcoin drops 80 or whatever. What happens when the stock market drops 40? Bitcoin, goes to $1,000 an ounce or $1,000 a coin? I have no idea. But that's my point. I don't know. You don't know. None of us have an example of how exactly Bitcoin would behave in a true market crash. And so if you're somebody who just buys and holds Bitcoin, as long as it's a calculated risk and you know your risks and you're making your personal decision, like you do your thing. But I'm not a buy and hold forever type person on Bitcoin because I don't know that we have enough history on the thing to make a. Now, if you're allocating very small to Bitcoin, I think that's different. I think that's a calculated risk, right? I think it's a calculated risk if you believe in it. But if you don't have strong belief, how the heck are you going to hold Bitcoin if it drops by 99%? Right? Most people will not. Most people will sell much sooner than that. Anyways, again, I'm not a Bitcoin hater. I'm not trying to sound like one. I'm just pointing out, like, you have to know your risks. So for people who are like 100%, I'm going to buy Bitcoin and hold it forever. Well, if in the next 5 years we experience true market recession crashes, it's gonna be rough, in my opinion. Maybe I'm wrong. Maybe Bitcoin flies during a recession and does what the crypto crowd has hoped for a long time, is like the stock market crashes and Bitcoin goes straight up. Maybe it happens. Oil is moving higher here today, guys. We are holding that 88 level again. Really nice little, once again, this 88 level, like a Stonewall Jackson moment. It just refuses to give. This is also driving dollar higher today. Because again, higher oil, higher inflation, dollar catches a little bit of a bid as people, anticipate Fed rate hikes or Fed hold for a longer period of time. What's up, my friend? Thank you for being here. Hope you're doing well. VIX is up 5% today. Nasdaq down 0.2. Nothing really happening on the indices this morning. Dollar again looks prime for a try here at the break. So I'm looking for that move. Like I said, I am long dollar. Specifically, I'm short pound, which so far is starting to show a little bit of strength to the downside, but we'll see. It's been so choppy. It's like it's down one day, it's up the next. It's up, and then it's down, and then it's up. So just been back and forth on the British pound, but kind of looking for this general area to hold to the downside. And if it doesn't, I stop out of the trade if we break through the 61.8 level. So if that happens, I'm out. But I am, like I said, I am long dollar. And if this breaks, I'm out of that dollar idea too. Headline, Iran stops message exchanges with the US. Interesting. I've never heard that headline before. Man, it's been crazy, man. Like it's every other day. US and Iran, we're almost there, and then we're not talking. And then US and Iran makes a big claim. US says, no, we're not agreeing to that. And then it's like back and forth and back and forth. And who's paying the price during all this? Consumers. Gas prices being elevated for a suspended period of time. And guys, if you get oil doing this again, there's going to be a point where this duration of high gas prices is going to take a toll. Now, I think we can survive. I think we're perfectly fine if oil starts to break lower. But if we start seeing, understand this, if we see oil make a run for 110, 115, 120 again, while I don't necessarily think it's incredibly likely, if it happens, inflation jumps significantly. Interest rates are probably going higher to combat inflation. Stocks may actually see a drop. Although I doubt it. They've been so incredibly resilient. Nothing seems to phase. But I do think, like, okay, I say that kind of jokingly because I'm a little annoyed that I missed some of the rally. Candidly, I still own stocks, so I'm not completely out of it. But I do think that if you get another bout with oil ripping through these highs, that will start to get the attention of the stock market again. Because if you see this type move in oil, inflation's going higher, it will force the Fed to make a more definitive, like, we are open to hiking rates to combat inflation. And we saw what that did to the stock market in 2022. It was no fun. So no one knows exactly how that stuff plays out, but you can see gold is lower today. It's worried about rates. Rates are jumping. 10 years up 1% here on a change basis. So Bitcoin breaking down, you're seeing a little bit of risk off flow come into this market. So we'll see if it can persist. And of course, we'll continue to watch the headlines, see what that brings. But I generally am leaning a little bit more on the risk off side of things. I'm long dollar, cautious on gold. I think structurally, gold still looks technically leaning bearish. Look at that move now. We're getting a little bit of sell pressure coming in on gold here. Take a look at your 15-minute chart. Boom. Gold breaking the lows. Very, very interesting. Anyways, guys, we are going to have Ivan taking over the stream here in just a little bit. He's going to be talking charts and setups that he's looking at. I'm sure he will be also sharing his thoughts on what's going on with the US dollar, the yen. He is the yen man after all, and other charts as well. So stay tuned for that. By the way, guys, if you want to try out the Edge Finder, this is the tool that I use in my videos and streams in order to scan markets. You can currently do so. We have a trial available on our website, as well as a free course that you can get access to. We'll drop a link here in the live stream chat. Boom, if you want to sign up for a trial. And hey, we just actually did something. James, I sent you a message. I'm not sure if you saw it. We have a new way for people who need some help about Edge Finder. If you are interested in exploring Edge Finder, we'll drop the link here in the live stream chat. He's on it. My man James on a Monday morning. Check this out. Click this link. It will take you to our new contact us page. We've kind of overhauled this. I want to show you something that we are launching. We're trialing by fire, because we don't know how much our team, we have a finite ability to work with people. However, we are offering for a temporary period of time, at least for now. I can't promise it's going to be here in a month. We're offering product demo calls with a member of our support team. His name's Drew. If you're interested in setting up a product demo call, this is free. You get a chance to speak to a member of our team about Edge Finder, about Stockbox, go through it on your own time with this person during a Zoom call. If that is something that you are interested in exploring, click the link that just got dropped in the chat. You can get a couple things here at your disposal. Our live chat link can get you access to our latest discounts. You can get extra discounts by chatting in. You can send us an email if you prefer that, or product demo. So if you're someone who's interested in Edge Finder, you have a couple options here with our new page to get in contact with our team and see how our tools might be able to take you to the next level. I say this candidly and excitedly. We have helped thousands of traders improve their trading by offering macro fundamental and sentiment scanning softwares that help traders build better insights in their trading analysis. Again, we have thousands of people around the world using our tools every single day for a good reason. We offer a product that I think can really take people to the next level. So if you're interested in exploring, getting extra discounts, setting up a free demo call with a team member, that is first come, first serve, by the way. If you're someone who's like, oh yeah, I want to set up a call, book it up. It is a Calendly, so it's like a finite number of calls that can be set up for free. And then that's it. So take advantage of it. Anyways, guys, up next, we have Ivan, Mr. Yen Man, taking over the stream, talking trading setups today that he is looking at in markets. Don't go anywhere. If you're more of a Forex person, this next segment will definitely be the one for you to check out. So stay tuned. Ivan, just after this. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Was this the volatility event I didn't want, but eventually got, but I was hoping for yesterday? Yesterday in the weekly planning meeting, I mentioned that I want to drop today of about 1 or 2%. So if we go to ES and it says here, I want to come back down to, well, 7,450 or about 29,400. That was yesterday. And I said, what if? And Iran gave me if. And what bothers me is, hi Max, hope your tanning is still, still kissing you nicely. Um, is that they're going to activate other fronts, including the Bab el Mandeb Strait, which is, for everyone that we have now known the geography of everything, is that is the west side of Saudi Arabia, where they have been sending as 5 million barrels a day, at least attempting to sending it through here. So instead of instead of sorry, instead of this over here being closed, now they're also going to close down here. So I don't know what else can we do now. I think they're just putting harsh against harsh. I would argue that Israel knew what they were doing, and by going further into Lebanon, even though there was a ceasefire. So, well, I was supposed to buy euro dollar today, right? I was about to hit press buy, and then okay. Well, it came down to my plan B. So right now, I also just talked about trading process in the mentorship, weekly mentorship group and meeting, and this is kind of the situations that I'm talking about that does not fit my trading process. I know that 1st of June is could be a volatility event, should be a higher day on a euro. So I'm not worried. I'm annoyed, if that is going to be a word. So for my trading process and my trades, I'm like, okay, this is not a trade. I'm like, okay, cool. That's a buy zone. Fair. But how did we reach this buy zone is through volatility, or for that matter, change in risk in environment that I don't like. So that's how fast the market moves and changes around. So what can I do? Well, I have a couple of ways to roam here. How much do I survive today? Do we hit 15.79, my initial stop loss? Do I go against, because I can see that stop loss is not great whatsoever? Do I go against my own rules and say I should put my stop loss below here, because that's what it's supposed to be in this environment? Or do I just enter again if it gets hit? Now, the only way to go through this is, of course, hit your stop loss and then see if you can get another entry. This is a part of risk that we take at the moment, trading dollar pairs, yen pairs, CAD pairs, Swiss pairs, or anything that has a pair. And I really sometimes just want to be trading apples, because that seems to be very seasonal and they get ripe once a year. But for me, that's kind of my first attempt. And then my second attempt is to buy Aussie dollar. I said that is my secondary, that's my number 2 trade. And then Mark is kind of evolving into, because that is a reversal over here. This is a reversal, and this is where the reversal stops. So we are now no longer in a reversal. And I really, 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 really want to buy it. But the problem now becomes, if Trump comes out and says something that they're talking to Iran, don't worry, something in that direction, this can turn around like, a rocket. So I have to pause, and then I just have to take the cost of having a worse entry tomorrow or today or whenever that entry gets in. And what generally tends to happen when we have these falls is that that's the candle. So I just need to make sure that whatever the candle we have, it stops. And then we may have another candle lower, and then a higher, and then a higher low, and then I can be looking into it. So I just have to be cautious and conscious about what I do so that I am playing within the rules of we're buying a support, we're buying a red candle or a white candle for my candles. We don't buy blue candles or green candles, but red candles as support. But I want to be dragged into endless support being broken. So, but at the end of the day, we have a very good level. And since last time, I have not been exercising, for those who's wondering. So yeah. Pound, same situations. I've seen, who was it? Nick who sold pound? Did you sell pound, Nick? Or you were just looking to it? I can see it. I definitely can see it. And if you get more issues with war with Stormer, then sure. Sounds like a great thing to do. You sold at least 21st. You sold pound, but okay. So you're trying. Okay, cool. So to me, we're just coming back down to support. Why wouldn't that be a problem? Oh, Simo, there you are. I knew I could find you. Hi, Evan. I hope not as. Did you enter pound? Maxipax. Yeah. Okay. Well, you're already 30% out. Okay, cool. Great. Whatever. Okay. I'm not going to say anything about that. I'm just going to say good luck. If I were in a positive, if I'm in a better, not a better mood, if I'm in a good mood, I really want to get into 134. I don't think that's even realistic or possible. I think we have to break through a lot of support levels. Of course, the upper one is of course 134.50. But we're broken through support, broken through center pivot. So we are on my buy zone. I just hope we can get a bit close to 134. But I can't rule out, sir. I can't rule out that I'm not gonna buy pound. If you ask us last time, I think you were the one who won the last. I think you won the last battle between me and you. When you're thinking 133. Okay. Think 133. And to be sure, and to be fair with you, seasonality wise, or generally speaking, you are right. You're right that it's supposed to go lower, generally for June. But my counter to that is that where we are now, that we rise until 5th or 6th, and then NFP comes out and dollar gets stronger. And then at the end of the day, towards 15th or 16th or 17th of June, you'll get it, but it might be a higher high first. So, that's so we agree, but I disagree with timing. And then we will see who is going to be right at the end of the day. But this is a great picture of how I'm imagining things to happen right now. Reversal, low 1st of June, new high, pull back, new high, pull back, get out on Thursday, on New York Thursday. Yeah, sounds to be great. Stay away from NFP, and then that could, for that matter, be the high. Could, for that matter, come back again, but that's generally the gist of a high, and then we can fall. So you might be right about it. And if you get, as I said, Starmer to help you with it, sure, go ahead, enjoy. So right now, to me, dip, 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 dip. That's what I'm looking at, and I'm playing that at the moment. But okay, somebody asked for dollar yen, sorry, and we have just almost made a brand new high. Did dollar Swiss do something that I wanted to do? Okay. Dollar yen, yeah. So made a brand new high. Kind of expected at this point where dollar strong, yen is weak. I didn't see that coming out our game earlier, but we're coming closer to 160. So that's of course a challenge that we are coming closer to a resistance yet again from Bank of Japan. I'm not going to say that it's going to do this, but I'm saying any level is a good level for Bank of Japan to intervene. But more importantly, I'm want dollar weakness. Dollar weakness is my friend. Therefore, this one shouldn't continue higher. But in that retrospective, yen is even weaker than that. So that is that. So Aussie yen comes in lower, Euro yen comes in lower, pound yen comes in lower. So this is a dollar strength. Everything else is weak. Okay. Fair enough then. Aussie CAD coming in lower, Euro CAD coming in lower, pound CAD coming in lower. How I view this is plain and simple. I see this as a buy. Wow. Okay. I see this coming back down to, generally for now, coming back down into buy positions, as in if you are a seller, I'm just gonna avoid. I would avoid looking for a sell at the moment with the current price. But if you get a pullback, sure, great. But I've tried in my previous young years to sell now, and because momentum is high and we should go lower, and this is groundbreaking, and we'll never get this opportunity ever again. That yes, that might be the case, that you might never ever get this opportunity ever again of this dollar strength, but market has a weird way of coming back, and the weird way is President Trump. So from my setups, what I'm looking for is, beyond anything, just the fall to stop, find support. Everyone here is fantastic at making support and resistance levels. So 133.50, 134. We'll see how it reacts if it comes down to those levels. Euro 116.22 is a level that I'm very much looking into, maybe getting another entry into. I was supposed to get in at 1644, sorry. I didn't. Went to eat. Thought that would be a good idea to do that. Was hungry. And came back and everything is falling. So that saved me 24 pips or so. But at the end of the day, I still have my entry from Friday. So that is in loss at the moment. So that is that. And then if we come into 116, 1590 or 80, which is, for that matter, likely at the moment, I'm not going to rule it out. That invalidates my trade idea for today, and then I have to wait until tomorrow for yeah. So I didn't finish dollar yen. So dollar yen is reaching higher. Great, all of that, fair, whatever. But it has an immense pressure from the Bank of Japan. Any reversal into anything Trump would say this would fall. So I would rather be in a position where, yes, we can take this on higher, but at the end of the day, we really want to start from the bottom. If that is 155, 154, 150, 147, something lower, but then we didn't end to the war. So as much as I can say, well, should have bought it, not really. Because at any given moment, we have had large volatility of about 100 or 95 or 50, 60. That was about 200, 300. So volatility has slowed down. So we could have probably got into those, but from now and this perspective, even though it is bullish and you can probably make money going higher, it's probably good, probably technically the right thing to do. I am very apprehensive as to 160 coming up, and we're probably not going to do anything. Market is probably not going to do anything there either. But it's about a risk for it to fall. So what is then the bigger dog to do? The bigger dog to do is to wait for 155 again. And then you have that thinking to yourself, is that ever likely? Yes, sir. That is very likely. Why is it very likely, sir? Because we have a potentially Bank of Japan rate hike, and we have a potentially an end to the war. And until then, it is higher. That is whatever. But the volatility, it's, I would argue, it's quite out of the books of a normal trading situation. So if you do trade now, it is, one, it's risk event. Two, it's high likely for a loss or high likely for a profit. So higher standard deviation. So if that's what works for you, then great for you. As I said earlier, I want this to fall about 1% or 2%. And already it starts to pull back. So maybe I'm not going to get that today. It's not necessarily hopes and prayers what I'm talking about here, but I really want us to come down to monthly center pivot, which is pivot points, which is more like a monthly support level. And we didn't do that last month. We started in April, and then we just continued. This can continue on forever. But for me to be ever slightly remotely interested, that's what I need to see. So whatever. So as you can see here, coming into central pivot M2, then November we didn't and blew through that one. Central pivot, M2, blew through it. And then we had the war, of course, and then coming back in again, didn't do it. So maybe. At the end of the day, that's the rules that I have. I need to wait for it. Aussie, I did. Waiting. Euro, I did. Pound, I did. New Zealand, I didn't. That's a hill. That's a round and a half of one bullish, then bearish. I don't really. Well, I want to buy it, but I'm not going to buy a falling knife. As I've taught you every single day, every single day of this year, is that you never buy a falling knife until it stops. So, because you never know how far it's going to go. Been there, done that. Could be a part of it. Also, dollar Swiss is coming up to the highs, hasn't stopped rising. Dollar CAD could, for that matter, reach higher. I'm not too optimistic about trading anything here about that. And yeah, Aussie CAD coming back to support. Really great. I like that. I really like that. I'm bullish on Aussie. I have seen the reports lately, but I believe that this one should, with the weakness in CAD, and we're also going to have the unemployment for one Merc and then Canada on Friday. That's a great scenario for more weakness because last month was horrible. I wouldn't say horrible, but I was surprised to the negative side. So that should and could and would weaken the CAD. So we'll take that into consideration. Of course, this Friday is far long way before that, but that's at least in the books. So that's a potential. Your CAD is potential. Bit of a range. I wanted to come down last week, it didn't. So maybe this week then, with the CAD strengthening. Oil is back up at 93. Just remind ourselves that weekly target is 95.40 to 97.95. And that doesn't need to hold for that matter. But once we get closer to targets on the week and hits them quite violently, for that matter, what we did at the end of April is that we ran through it and then paused and then went back and lower. So even if you see right now a bullish candle, you want to be part of it. You saw Nick being like, "Hey, it should probably have bought it." I would argue it's long gone. There is a potential bullish setup here, but you have to be aggressive. So that's hindsight. Now the question is, can you catch the pullback? If you get a pullback on this one, you are going to, I think the situation is over then. So the only way is up. Do I believe that we're going to have Japan intervention? I don't think that it's immediately in danger, but I'm not going to trade dollar yen to the upside just because it's possible shorts at 100. Yeah. Any price above 95 for me, after we have stopped rising quickly and fast, is definitely a level to look for. Am I going to actively short it? I don't know about that though, but I'm not like, okay, for that matter, take the reaction, take the reaction out of the market. Okay, so let's say we have 6 minutes left on this candle for that matter, but we have now 4% higher. We have gone from 89 to 93. Is that a crisis? Is there a reason for freak out? And my simple answer is no. This is just market repricing things. But of course, it's still 5 minutes left of the candle. We'll see. But this is very, very within the normal daily volatility that we have seen lately. So it shouldn't cause any concern. So that's a candle for today. It's about 6%. Going lower was about the same candle. That candle was way bigger. That candle is way bigger. That candle is also bigger. So the current candle on the daily is not much concern for me. But what it is concern for me is the monthly target, weekly target, sorry, at 95. Then we can say, what about a monthly at 108? I mean, if everything goes, not that everything goes wrong, but if everything goes wrong, then 108 is definitely a level to look for. The question that I really have to ask myself, and you ask yourself, is how willing is the market participants to join in on this run? That's going to determine. And to me, that's too much uncertainty. Was it pound Swiss or something I spotted earlier when I was doing pound dollar? I might have missed it. Pound Swiss, it was Teddy League. Okay, cool. Yeah. I mean, I'm not going to give you a lecture on range-bound markets, but we have bounced off some attempt of a support, and the only way forward for me is higher. I think this seasonality was bullish, if I remember correctly, meaning expectation for it to go higher. But with the current price, action doesn't really benefit. Yeah, no, nah. It doesn't speak to me. What would have spoken to me if we were here? Then I would say take it higher, come back to support, and then we buy. And then you'll be like, yeah, but what if it does? But that could have been a good buy. Yeah, okay, cool, great. And then there you go, and there's your entry. Then we can speak, and then that's your target up there, and then stop loss is down there, and then we can continue on forever. And then it goes higher, then you think, great, and then it doesn't reach your target, and then it goes back down to central pit, back down to your entry again, and the broker is just collecting interest of you. And at the end of the day, yeah, maybe. But beyond, what is it? Beyond, from here out, we are in a range. So we have to break out of the range for me to be interested. I do apologize for that. Now could be the time. Could be that should have bought it down here, but it is also very high support because that's a secondary support, technically. Then, which one do you take? I take none of them because it's this fall here speaks to me that we are could fall more because we didn't rise up the targets. Japanese 500, sorry, Japan 2025, sorry, 225 hasn't come down to support yet as I want, but I mean, could be, would be. That's not what I'm looking for. Just reiterate 29,400, 7,400, something like that at alert. And then euro dollar is breaking 116 at the moment. Seems to be a red day for me. You need to wait for tomorrow. Aussie, red day. Pound, red day. New Zealand, redder day. Dollar Swiss, even redder day. And dollar yen making a new high. So for those who are dollar bulls, congratulations. You guys are currently the best. And yeah, I've seen gold dump, so expect it to go lower until Donald Trump comes out and says something. Yeah, and even if it's shorts, I should have looked at, but if you look for shorts, in the summer shorts, I would argue that 106. And I wouldn't argue that it's a great resistance level. It might be the level that it comes to resistance, but technically you're in a range where you want to be at least in the higher part of the range. And if it breaks lower, then you have a trend. Manufacturing 54. All right, cool. It's ISM though, so it's a bit less important, but okay. That could strengthen the dollar. So if you want to see more of me, you should head over to my YouTube channel at EvanFX. And you should definitely reach out to the team to get an appointment with me to learn more about your trade, to improve your trading, or reach out to me in Discord, wherever you find me. I'm here to help you becoming a better trader. And until next time, boom, I'll see you.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, good evening, good afternoon, everyone, wherever you guys are watching this. Hope you guys had a fantastic weekend. And just right when we thought that there was going to be an end to the war in the Middle East, the price of oil was progressing lower. It looks pretty good. We got a headline this morning of the quite opposite here. So we are seeing oil up 7% today, and the obvious trade is back in session, right? The obvious trade is oil long, right? Yields higher, bonds lower, dollar higher, gold lower, right? So the obvious trade is back in session here until we see something different. And so yeah, we saw the headline. I saw it this morning here. Basically, they stopped communication. Iran stopped communication with the U.S. There was some bombing that I saw via Wall Street Journal. So a lot of that going on. So it seems like, dollar is poised to go higher. That's kind of what I'm going to emphasize here on today. We also do have a stacked calendar for the dollar. So we had ISM manufacturing this morning come at 54. The forecast was 53, so expansionary, which is good for the dollar. That's going to continue fueling that dollar rally that we're seeing this morning. And then you do have ADP and ISM services on Wednesday. And then on Friday, you do have some employment numbers for the U.S. So lots of things coming up for the dollar. Let's look at yields. I would imagine they're higher. Look at the 2-year yield, up 2% today. 2% on the yields. The 10-year yield is up 1.6%. So you still have this upward trend there in the bond yields market there. So nothing progressing there. Expect that if you continue to see that, that's going to fuel that dollar, right? So dollar index here looks very interesting to me now more than ever. It has been trading sideways for a long time. This is the measure this move out here for about 18 days. Dollar has been moving, kind of range bound right here towards the upper end of that channel by 99.5 resistance. If I go to the 4-hour time frame here, I'm very interested in seeing a breakout of here and a retest, right? Remember, I don't want to enter prematurely, but I do want to see a technical confirmation. So I want to see a break and retest of 99.5, and then I would buy dollar, or a deeper pullback into the dollar index. Now, we did get some kind of a pullback. I was being very patient for that 200-day moving average. We didn't quite get there yet. So it seems like the preferred method for me right now, what the price action is telling me, is that most likely than not, we get a break and retest on dollar, and I'm going to trade that to the upside. There's 2 ways I wanted to trade dollar. If you guys remember, I wanted to short the euro or go long dollar CAD. Dollar CAD has not presented a pullback and is moving away from me. So that one, unless something happens, unless I get a pullback for something, I'm not going to be entering this one. But euro dollar, I like a lot better, right? Similar to the dollar index there. It's pretty much mirrored, just inversed. If you do get that break and retest in euro dollar, I'm going to trade this one to the short side. What I like about this one is that it is getting a bearish reading on the edge finder of -5, right? So edge finder confirmation looks good. The technical confirmation goes good, right? And also, too, just like the polarizing sentiment around the war, that's also in favor of dollar strength. So a lot of things are poised in my direction, right? Yields higher, oil higher. ISM manufacturing came out good today at 54, right? We'll see what services bring out. Services is the bigger part of the U.S. economy, the GDP, right? So we'll see how that plays out. If you start to see, some pretty strong growth there alongside this war, right? We're going to be one of the more hawkish central banks, but then we're also not struggling from growth as well. So I like dollar a lot. So euro dollar to me makes the most sense at the moment to go ahead and participate in that long dollar. You could also go pound dollar as well, right? Pound dollar is a very popular trade. In fact, the pound basket is getting very beat up right now. So pound isolated is getting a -7 bearish reading. Then you have pound dollar getting -8 reading. Then you have pound Swiss, pound Kiwi getting very bearish readings, right? So, and for those that are new here, this is the Edge Finder. This is the tool that I use to go ahead and filter my trades, make my trading decisions off of. This helps me be aligned with the fundamentals and also trade my technicals as well, right? It makes fundamentals just as easy as technicals, I would argue. So that's what I'm using here. So euro dollar, I like. Dollar CAD, I wonder if it's on the bullish reading. I don't think so. Yeah, getting a neutral reading of -1. So dollar CAD, it's really strong. Don't get me wrong. It's really strong. Price has moved, but the technical factor is not there, and the Edge Finder score is not there as well. So I'm gonna favor here euro dollar for now, and it seems like I might get that entry today. So we'll see. We'll see what happens there. Simo says possible ECB hikes. Yes, Simo, you are completely right. Let me show you something though. Let me put this into perspective. When you're trading currencies, you're trading currency pairs, so you're trading two at a time, and you always wanted to kind of compare them on a relative basis. So let's look at CPI in Europe. CPI in Europe is at 3% versus ours is at 3.8 in the US. So we are starting from a higher vantage point. So the theme is right now that most central banks right now, because of the war in Iran, there's going to be higher prices of oil. Higher prices of oil is inflationary. So let's say our CPI is at 3.8 and then ECB or Europe is at 3%, right? We are starting from a higher vantage point. So as inflation ticks higher, Europe's inflation is going to tick higher, but so is ours. So we are starting from a higher vantage point. We're going to continue, kind of beating them on the inflation front or on the interest rate front, right? So let's also look here at CME Fed Watch Tool. Let's see what the probabilities have switched because I haven't seen this yet after reading the latest news. If we go to probabilities, you can see here that we are still very, very poised for rate hikes as early as December of this year, right? So we are very much starting from a higher vantage point. Let's go to the interest rate data too. Let's go to inflation. Let's go to interest rates there. I'm going to look at the US. The US right now is at 3.75 and Europe is at 2.15. So even if Europe hikes today by 25 basis points, we are still the higher yielding currency. And also, we are still beating them on growth and all that good stuff, right? So, although yes, the ECB is looking to hike rates, even if they hike right now, let's say even if they hike by 50 basis points, we would still be beating them on that front. So, when you're trading currencies, you definitely want to speak in relative terms. And good thing for the Edge Finder here, you can basically look at every single economy, right? You can look at the US, you can look at New Zealand, right? You can look at the pound, for example, right? Pound is actually really, really strong as far as the interest rate, right? They're at 3.75. And if you continue to see that inflationary pressure, right, the pound, right, could have to start hiking, right? And that's why I kind of don't like the pound. I kind of like the Eurozone better as far as shorting against the dollar. That's just my personal opinion. But yeah, that's what you need to be realizing here. So as long as that continues to happen, as long as we see higher prices of oil, higher yields, that easy money trade, or not easy money trade, but the obvious trade of going long dollar continues to thrive. Another thing, right? One thing I was talking about last week was gold. I really liked gold here at 4,400. I wanted to go long gold. It was very contingent on one specific scenario, which is the war ends. Because if the war ends, you get lower prices of oil, maybe get some inflation cooling down the line sometime in the future. Gold likes that, right? The money printers come on, whatever. That's not the case, guys. That's not the case. So we're seeing gold reach a very important technical level, which is 4,400, right? You can see before we broke, retest, broke higher, you shot up right here, and on every major drop, you have found some solid level of support here. Now you're right there on that 200-day moving average. If you see a break of this level here, while still seeing elevated prices of oil, elevated yields, all that good stuff, then gold can break down lower, and then you can get some better discount levels, right? For a longer term investor, that's good for you, right? But if you're a trader, you can see gold just have a slow grind lower for as long as this thing stays on, right? So one thing to take note of. So yes, it's a very solid technical level, but as of now, as of today, as of speaking, it seems like gold could probably break this level as of right now. Now that can change, right? If you were to see, I don't know, if you were to see the war end, right? If this is all a front or something happens that we can't predict and they shake hands tonight, then yeah, maybe gold holds this level, right? The market has a very funny way of like lighting up technicals with the fundamental stories. Like in hindsight, you look back and it's like, wow, that was so obvious, right? But you don't know. But yeah, right now gold poised lower. Silver, I don't like the silver's market at all. I think this is a dead trade. I wouldn't be surprised if this thing just slowly grinds lower to like 40. That's just my personal opinion. But yeah, Bitcoin, let's look at Bitcoin too. Yeah, it's performing like it probably should, right? This is a high risk, high beta asset. And it's starting to be more sensitive to the war. So you're seeing some kind of a risk off move in Bitcoin. Looks like it's pretty much aligned. So yeah, we'll continue. Yeah, pound's getting some beat. Yeah, it is. The ISM report came out 6 minutes ago. It beat expectations, Ethan. So stronger dollar. It's going to add some more fuel to that trade or to that dollar bullishness idea. Angel says gold is becoming bearish on the charts, but it says neutral on the fundamental readings. How can one make a trading decision from that? Well, Angel, if it's getting a neutral reading, we say this on the channel. If it's getting neutral, you don't trade it, right? You got to have everything lined up to make a very good trade idea. So the technical level looks solid, right? Looks very, very solid. But if the reading's not there, if it's not aligned, you don't take the trade, right? That's how you can avoid unnecessary losses. Let me show you this, Angel. I made a post about this last week. When the war started, everyone, the war was announced over a weekend. It was like a Saturday where I'm living. And everyone said on the market open on Sunday night, buy gold, full port it. It's going to be the easiest trade of your life because it's war, right? So, usually war, risk off, something like that. Gold is going to thrive. It's a safe haven. That candle, Angel, was right here. This candle right here where my purchase is at. Had you had bought that, you would have went straight into drawdown, and then you would have been chopping around, right? So where I'm getting with this, the Edge Finder was telling us the same thing. It was telling you not to buy gold, right? While everyone in social media was buying gold, rushing to gold, it's going to be the easiest trade of your life. Actually, I'm going to go to the Edge Finder score history, and I'm going to show you this. Let's go to gold. And I have Marco here joining me here soon. So let me go ahead and finish this take real quick. And we're going to put the range to March update. Where is the score? The dates are right here. Okay. You see right here? No bullish readings at all for gold. None. While everyone was telling you buy gold, we were saying not to buy gold. There was no bullish confirmation. So while everyone was rushing to buy, you could have saved yourself unnecessary losses by just referencing the Edge Finder and not buying gold. And you're getting the same kind of reading today. The Edge Finder is telling you not to buy it just yet. Marco, how you doing, man?
Yo, I'm pretty well. How are you?
Very good, man. I hope you had a good weekend.
I've had a pretty good weekend, yep. So markets have opened. It's a bit of risk off. So I think the latest post on Financial Juice was something about Iran no longer talking with the US, possibly. So it's kind of the same thing that we almost have a deal, but then there's no deal in the end. And I think that is because, like, I've made a video about it last week. I think that is because of the nuclear stuff. So still, in all of the posts, the thing that is missing, the missing link, is the nuclear topic, and moving uranium out of Iran and not enriching it to 90%, what you need to build a bomb. So it's kind of turning into a forever war, or it's not a forever war, but it has been dragging on for quite a while now, for quite a few weeks, and could be putting more pressure on the risk on assets. What do you think about this week and how it started?
Yeah, I mean, I'm a little disappointed, man. From a human being, I was like, yeah, where it seems like things were progressing. You had oil at the lower bounds of that range, 85, between 85 and 117.
Yep.
And then you get this, right? So
Yep.
It kind of sucks. What do I think about it? Well, I think that the obvious trade continues to be alive, which is short bonds or go long bond yields by going long the dollar, going
Mm-hmm.
long oil,
Mm-hmm. Mm-hmm.
shorting gold, maybe.
Mm-hmm.
The indices, I wouldn't short the indices, so I'm not gonna say that because look at that. They're barely down on the day. They're barely even flinching, man. That's stupid.
Yep.
So
Yep.
yeah, I mean it seems like just the obvious trade would be long dollar.
Yeah, I think so. I think so as well. So what would you pair the dollar with?
The euro dollar makes the most sense. So from a technical
Okay.
perspective, I was going down the list here. Dollar index, right? If we were to get the break, this is a 4-hour time frame. So just a break and retest, I would
Mm-hmm.
pursue going long to dollar. I really like dollar CAD. Don't get me wrong, and it's very, very strong at the moment. But the pullback,
Okay.
I didn't get in on this pullback just because I was waiting for the fib of 38.2 at least to get filled in. So we didn't get there, and it's already rallying there. So I missed the trade. So the next best one, which I think is actually the better one, would be euro dollar. Euro
Mm-hmm.
dollar because if you go to top settles page, you're gonna see that euro dollar is getting a bearish reading here. So euro USD, it's getting a bearish reading of -5, and then dollar
Mm-hmm.
CAD
Mm-hmm.
is getting a neutral reading. So although dollar CAD is relatively strong on the price action, the euro dollar has a better technical potential, and it also has the edge finder reading in favor. So I'm going to stick with that one there. It's just a matter of break and retest. And honestly, Marco, the way the price action is developing today, I may be entering the trade today by the end of today.
Okay. Cool. Targets 1.15 maybe. That's the first one.
I think I'm just gonna like target the round numbers and then trail as it goes.
Mm-hmm.
So yeah,
Yep.
1.15 makes sense. I'm not gonna shoot for the stars on this one just because as we noticed last week, right, things were developing. So maybe something happens or something changes. So 1.15 would be the better one, and then 1.14 is gonna be like the longer term kind of target there, and that one will probably
Yep.
coincide with dollar index at 100.5, right? So kind of what I'm
Oh,
looking for.
don't tell Ball out. He'll go crazy.
Where's Ball out, man? He's quiet today. Dollar's pumping, and he's a little bit too quiet for my
I
liking.
noticed he is offline on Mondays, so that's
He's a
the
bit,
Ball
he's
out thing to do.
he's a busy guy. He's a busy guy. He adds a lot of. He gives the chat some character.
Yeah. So.
But yeah, what about you, man? So
Uh-huh.
anything changes for you as far as trade setups, or are you kind of like on the same boat of like the obvious dollar long kind of thing?
I'm on the dollar long boat. I'm back on it. I've stepped off it for a couple of days, but now I'm back on. But what I wanted to mention before I forget, so I believe Nasdaq, or the guys that are, I don't know, working behind the Nasdaq or building it, have changed the rule where it used to take 90 days for a company to get put into the Nas, but they changed it to 5 because of SpaceX. So now once SpaceX comes out, if it becomes big enough, it could get put into the Nas in 5 days. So that could have some repercussions for the Nasdaq, and could be a short-term scalp opportunity. I'm not yet sure if it would be a buy or a sell, but I think it could be some volatility. Or you can sell Tesla. I think selling Tesla is a pretty good deal because of the Elon Musk premium that will go from Tesla into SpaceX. But getting back to the topics that most of us are trading and focusing on, I think the dollar long story still makes sense. Now, according to my research, Warsh will be speaking. There's a Fed meeting in 2 weeks, I think. So not next week, but in 2 weeks. If we go to the calendar, we go to so June 17th, federal funds rate and the FOMC press conference. So we will get the first thoughts from Kevin. And as far as I can understand, he is choosing the lowest inflation print that he can. So there's like 30 or 40 inflation prints that you can choose from. And the highest one is 4%. The lowest one is around 2%. Well, apparently he likes the one that is just below the lowest ones at like 2.2 or 2.3%. So that's a very dovish sign right there. But we will get more information in the actual press conference of what he says that he's focusing on. Because that could have a big impact on the dollar. Now, to place a trade before the June 17th, I think dollar longs could do well, especially because I just don't see the conflict de-escalating. I think it's all smoke and mirrors, and I think it's just gonna go bullish for the dollar.
Here's my take, man. I think it's really risky for wars to really, I would say, disrespect the Fed like that. To out of all the possible readings, you're gonna choose the lowest one in an environment like this.
Yeah.
The fact of the matter is, though, it doesn't really change much because he has to gain the vote of everybody, and we kind of know
Absolutely.
where everyone
Yep.
else stands, right? And you also
Yep.
have Powell still as a voter, so
Yeah.
I don't think that's
Yeah.
gonna fly. I think I think from a reputational brand risk perspective, he should probably be a little bit responsible and kind of be aligned with everyone else. And the obvious is, if you get higher inflation, you probably shouldn't be cutting rates. You probably should be at least holding rates.
Yep.
So we'll see how that plays out. That's going to be interesting. So you said June 17th?
June 17th. June 17th. And I mean, it's not so much about what the Fed will do as a committee. It's all about how the market interprets the actual press conference. So I think like the markets are smart, but there's a lot of dumb people trading and investing that shouldn't be doing that. And I think a lot of them could get caught into, if Kevin quotes the lowest inflation print, they could get caught into that print and they can interpret that as dovish. So the initial reaction could be dovish, if you get what I mean. And then later down the line, it could play out as, it's a committee, they're going to vote, blah, blah, blah.
Yeah.
But we also get the economic projections, which the whole committee votes on. So that should be kind of a clear-cut plan for the next few months of the rate cut path. But
Warsh wants to. I think, if I remember correctly, he wants to take away that dot plot, man.
Yeah.
I think the biggest takeaway would be: is there division in the Fed, or are they aligned for the most part? If you were to get some kind of misalignment, extreme division, conflicting things happening, then I think actually that could be a catalyst where the stock market trades lower. Because that uncertainty, that political uncertainty, definitely influences the markets in a bad way.
Yep. I mean, like, what would you say? So if we look at the Nas, if I put up the Nasdaq here, what would you say would be the first sign of any cracks in the artificial intelligence story that could produce a pullback here? I have some idea, but I want to get your thoughts on that. So let's say you're closely watching the top tech stocks, you're watching the earnings, you're watching the CEO press conferences, speeches. So what would be the first sign of cracks? Would it be the Fed, or would it be the tech companies themselves?
I think it would be, as far as like how I could read it, because I feel like it's impossible to have like your ear in every single conversation. So I think I would revert to the price action. If you just get if you were to get indexes kind of stalling out, that would be kind of a tell right there. But again, like you would see like these pullbacks, like this recent one, if you want to even call it a pullback, it was, I mean, it was 4%, right? It's 4%, and then you're up now you're up 6, right? So I don't know. I think really with this chart specifically, or any index chart, because they are pretty much the same, I would just put an alert somewhere down here, man. I would just right here put an alert somewhere. I don't know, somewhere very, very low, and I'm just gonna wait. I think if it does start to pop, if there is a bubble that needs to be popped, when it pops, I think it will be very fast and ugly and mean. So you'll see the traditional, like the VIX will spike, right? Or correlations go to 1, everything sells off simultaneously, stuff like that.
Yep. Well, that's definitely a good indication. One thing that I would like to see is the earnings. So Nvidia is the best example. Like Nvidia has been crushing earnings. We can put it up here. So if I go to the stock box and then we go to the earnings, or actually, I think it's the earnings report tracker. And we go to NVIDIA. We can see that they're beating earnings every single time, pretty much. So I think once they stop beating earnings and it goes a little bit below the forecast, that could be the first sign of something is not right. Or you could get the some CEOs saying, CapEx, we spent a lot already, let's dial it down a bit. So that could be the sort of the second sign. But as long as these earnings keep beating the forecast, I think the train is just going to go up, because that's sort of the fundamental story behind it.
That's what markets are purely trading off of that, right? They are essentially disregarding the war, and they're saying we're going to just start pricing in other things because eventually it's going to go away. And as long as that is true, that it does go away eventually, then they're correct. They're okay with pricing in, forward. They're front running the current environment right now as far as like the earnings, like you're saying, and all that good stuff, right? But when that goes away, they have to realize that, okay, this happy train is gone. It's starting to stall out, and then you still have the war going on. Okay, now let's start to reprice things. That could be very ugly. But I've said this many times, like I wouldn't long it and I wouldn't short it either. So there's really nothing I can do.
Yep. So if we go back to, well, let's not go back to currencies, but let's go to crypto. Bitcoin, selling off quite a lot. Do you think we get the 50K by the end of this year?
Well, I know one gentleman that would be thrilled. I've said 50K before too, though. I'm not gonna lie, Marco. So whenever we had from technical eyes, whenever we had this break of this one right here, this 70,000 mark.
Let me chart just a second.
Oh, sorry.
Okay.
When we had this initial sell off here, this was Japan bond yields rising higher, and so that was like the whole the carry trade unwind, speculative positions were unwinding there in crypto space. We had an initial break of like this 75,000 mark, and I remember talking about me specifically. I was like, okay, like now Michael Saylor's underwater, right? Because his average price is like 73 or something like that, 76 give or take, and we had price action coming all the way right here. Now it ended off with a strong wick, right? But at one point you have to remember that the price was this was a full red candle right here. And I was like, actually, 50K sounds like a very good spot. I'm not going to lie. You can see here that before it was support here. It's a really good discount. So I think, Marco, honestly, I'm not even trying to be funny, but 50K seems like a very good discount level.
If it actually goes to 50K, I'm just going to exit the A1 Discord. I'm just going to quit.
You just got to submit, man. You got to just put your hands up and say, look, I was wrong. But 50K, I don't think it's bad. I don't think it's a bad call at all. I really agree with it. Honestly, I really do. I think that would be a good discount level, and that actually takes away some of that like super speculative positions, and it allows Bitcoin to trade off of fundamentals or natural price or whatever you want to call it, right? So I think it's a good level. So I think, I mean, look at that, right? We're speaking in hindsight now, but now it's rejecting that 200-day moving average, right? Perfectly.
Yep. I mean, if you look at the prior corrections in Bitcoin, they haven't been this small. It's been 70, 80, maybe even 90% in some crazy scenarios. I think we had 3 or 4 of them already. But this one doesn't seem so bad as the prior ones, and maybe it should seem so bad. So maybe we still need to see a bigger correction. And it would make sense because the retail hasn't capitulated yet. I think the start of the next bullish cycle will be when everyone hates Bitcoin and everyone is calling it a scam again, and everyone is calling like it's never going to go up. That's when it goes up, and this is not that point in time.
Yeah, when sentiment's so one-sided, that would be when you're starting to find some value, right? But for now, Marco, and I'm gonna pivot out right after this one here because I know you have some DNA funded challenge. I know someone in the chat was asking if you have a challenge giveaway today.
No, we're pausing a bit. So pausing a bit. No giveaway today. So yeah, if you have any more thoughts, I'll be happy to stay on with you for a bit longer.
Yeah. So I was just gonna say like my obvious thing, although I was very optimistic about like that, but One thing that I'm going to start emphasizing on again is going to be just the obvious move, which is going to be dollar to the upside. Right, I think it's going to make sense. I think just even thinking from a macro lens, if you were to get the word to end today, you still have a lagging effect of that recovery for inflation and the higher price of oil and all that good stuff. So it's kind of what I'm going to be thinking about today and moving forward until you get something drastically different. But I've learned, and I have to remind myself that although the headlines look positive, the fundamentals will, override that, and we're seeing that with dollar today. So that's it, man.
Yep. So your favorite thing is the dollar, bullish dollar.
Bullish dollar, yeah. And I think too,
Cool.
like if you're trying to, for the people that are like trying to short the indexes and stuff like that, I think the better way, a proxy way to go about that is actually going long the dollar, because you have that inverse relationship where, like, if you were see, now it's not the case right now. Obviously, you're seeing the stock market up and the dollar up, but usually, right, traditionally, you do see stock market down, dollar up. So if you want to benefit off of that trade while not being exposed to being straight up short the indexes, I think playing the dollar long game is actually a good one too. Or if you even want to participate in the bond story, if you want to go long bond yields, dollar index has a really high correlation to yields right now. So I think this is going to be a very dominant player. So I think that if you get that breakout that we're looking for, I think you can at least target 100.5. And then from there, if you get to 100.5 and you still have higher yields trending higher, still have oil above that 85 mark, still in that range there, then I think it can break out longer term, and you can start looking at maybe 102, 103, 104, so on and so on.
Yep. I just want to see a breakout out of that range. It's been a big range. It's been months of just ranging price action on the dollar. And if we can commit to the upside, that would be great, But I think especially like US exceptionalism plus a more hawkish Fed could be the fuel we need to go up. So the Nasdaq doesn't even have to correct. It can continue going up and the dollar go up with it, because of course to participate in stocks you need dollars. So the flows go dollars first and then into stocks. That's why the dollar benefits from US exceptionalism. UJ intervention?
No, actually, you know what? Ballout made a very good comment earlier today about that. He and I'm so aligned with it too. That's basically what I just said. But he said USD JPY, who cares? The trade is crude, Bitcoin, indices, and I would add the dollar to that list as well. So yeah, I'm just gonna stick with that. Another thing to mention, Marco, we had ISM manufacturing today. PMIs beat expectations. I think the forecast was 53 and we came out at 54. So that's more fuel to the dollar. So although we are experiencing, or the world is experiencing, that inflation risk, the growth in the US is still solid. You have ISM services on Wednesday as well. So I'm curious to see how that's going to line up. I don't actually know what the figure's supposed to be. It's supposed to beat expectations slightly. So I think even a beat, we're still in that expansionary territory above that 50 mark. If you were to see ISM services, which is the majority part of that GDP figure, or services is the majority part for most economies, but ISM services, if we do get a beat, that's going to be even better. Like, it seems like the market, the US is more resilient than it is to others, and I think that's going to add more fuel there. And then you have Friday, you have unemployment rate, and NFP. So lots of stuff for the dollar.
Yep. I think it's a good story. Yep. Dollar longs when it comes to FX. And UJ, I think I got a question in the A1 Discord as well, like what I want to sell at 160. I don't know. They did an intervention. It wasn't successful. Let me just bring it up here. So if we remove this, add this, UJ. So they did an intervention, wasn't successful, complete retrace. They tried to sell it a little bit in this uptrend, didn't work. So even if you get another intervention, you'll probably need to take profit pretty quickly in order to avoid a complete sort of retrace of the whole intervention. That's why I'm not exactly sure if I want to participate. But one thing that is on the radar is Euro Swiss. It was close to 0.9. Now it kind of flew back up. Of course, 0.9 level is the round number that everyone is watching, and the SMB is definitely watching. They don't want to see that get crossed. So we already had one pretty significant bounce off of that level. And my game plan was to buy ahead of that level. So I know you were looking at the Swiss franc a couple of weeks ago. Is it still something that you're paying attention to, or are you just ignoring it for now?
It's like not. I'm not really putting so much emphasis on interventions at the moment. It seems like,
Okay.
I mean, from what we've experienced with dollar yen and even dollar Swiss earlier in the year, when the Swiss National Bank was very vocal, it seems like right now the overriding story is going to be the war, and so I think like keeping it kind of simple is kind of be the best bet. I like dollar Swiss here. I'm going to put my screen up real quick here.
Yep.
I was saying this on Friday last week that I was kind of waiting for dollar Swiss to kind of get to some discounted levels. And we didn't get that. So we're seeing dollar Swiss up almost 0.88% today. So I'm just gonna stick with that dollar long story and see what opportunities I can get. I like your dollar a lot, and so I think after here when I pivot out, I might enter that position.
Okay, cool. So you're looking to take EU right now. I'm gonna leave you to it. I'm not gonna bother you too much anymore. So if you wanna head out and execute the sell, you can definitely do so. But yeah, thank you, Alan, very much. We will see each other tomorrow, and hopefully the dollar long story does continue.
Yeah, no worries, man. And one thing I will say here real quick, Leon said, can you look at the VIX? The VIX is oddly low today. It is oddly low. It's up 5%, but it's in the teens right now. It's in 16. So don't let that fool you. Don't let that fool you. There have been times where the stock market or there's a violent reaction when you have a very low VIX and you get a very crazy violent push up there. So something to keep an eye on too. So I'll be keeping an eye on the VIX and bond yields. 2-year yield up 2.10%. The 30 years almost up 1%, and the 10 years up 1.6%. So very, very, very bad in my personal opinion.
Yep, absolutely. Elevated yields.
All right, man. Take it easy, man.
See you tomorrow, Alan. Goodbye.
All right, cheers.
So unfortunately, I don't have a giveaway for you today. We're pausing, but the giveaway is for a little bit. But we have the Ola Prime discount code if you're interested. So 35% off with the code A1 Live. It's there below my picture. So I'm just gonna put it here. A1 Live gets you 35% off. Okay. I haven't opened my DNA account, so I'm not going to do it now, but I think I'm still in a little bit of drawdown. If you're wondering about an update, I'll open it tomorrow, so I'll show you. I think I'm in a little bit of a drawdown. This risk-off theme today definitely hurt my ChatGPT trading account. As far as my personal trading decisions go, I am still long on gold, so I'm still doing gold. I'm keeping it open, not closing it, although it's kind of not doing much. So what I do like about it is we have bounced off of the 200 EMA. We are holding this support level. I think most of the weak hands have been shaken out. There's still a lot of demand from China. So I'm not seeing if any selling pressure, if sell pressure does kick in, I don't think it's going to be drastic. But if buying pressure kicks in, I think there's a lot of opportunity to the upside. So the reward to risk is skewed, if that makes sense. It may be 50-50 if it goes up or down, but I think if it goes down, it's going to go down a little bit. But if it goes up, it's going to go up a lot. And that's what trading actually is. It's looking at opportunities where there's a skewed reward to risk, where you get a bigger reward with smaller risk. Although the win rate is 50%, that's trading. Keep the loss is small, winners big. Win rate 50%. Marco, how much swaps have been charged from holding the gold long? Let me see. That is a good question. That was actually something I was wondering right now. So let's take a look. 10 euros on my Darwin X account. So the Darwin X account is 100K demo account, which then gets transferred into a Signal, but basically 10 euros for holding it, which is really small. So it's not a problem. Definitely not an issue. As far as the watch list goes, I have the same things, but I have added the Euro Swiss. Euro Swiss was on there because I thought we were going to go near the 0.9 level. That doesn't seem to be happening anymore. So let's put it back on the rest of the list, sort of. My main idea behind this was if we hit 0.906, 904, it could be a good level to buy into. I already did it once, not this. I already did it once here, so it worked out okay. Actually, it worked out pretty well. I would bet on the same thing if we do approach that level. Let me just see NZDCHF. NZDCHF. Okay. I still have the Nikkei. I still have the Nasdaq. So looking for pullbacks to the 20 MA. As I was talking with Alan, I think the Nasdaq will keep flying higher as long as the tech stocks can keep crushing earnings. And if you go to the stock box, if you look at Nvidia, pretty good. Let's take a look at some stocks. Apple, beating earnings, absolutely. What about, although with Nvidia, what about Amazon? Let's take a look. It looks fine. It looks healthy. We could filter just for sort of the stocks that are impacted by AI. Google could be a good one. Google is a direct player with Google Gemini. This is amazing. Like, look at this last print for Google. Look at the actual EPS and the estimate. That was a massive beat. So as long as this can keep happening, we're golden. And this is just going to continue going up. It's not going to go on forever because it's a bubble. You know, sooner or later a correction will come. People will get over leveraged. There will be too much money on one side of the trade, and the tide will come in. Or is it, yeah, the tide? And then people are caught with their pants down. I'm not sure. There's a saying with the tide and no pants and stuff like that. But essentially, people are over leveraged like they were in the dot-com bubble. People are massively buying artificial intelligence stocks. There's a lot of investments into AI. There's a lot of CapEx spending, and there is no chance that all of it pays off. There's no chance. Like Americans especially, but humans as a race, we tend to overdo everything. So we invest too much, we buy too much, we hype too much, and then you get a bubble. And then you get a crash. But I think it's not the time yet. I think right now is the time to buy the dip and participate going long on the NAS. Hello, Sluggy. I'm doing pretty well. Hope you are good as well. The thing with Euro is the ECB is pricing in insurance hikes. What the hell is that? I'm not sure. I'm going to have to look into that. Aussie Swiss. I do believe inflation comes in super hot. Their hike narrative might be justifiable. Yeah. I mean, the main thing that the ECB is watching for is the inflation. Absolutely. The most important part is the inflation print. Okay, I have ran out of time. Don't go anywhere because you have Tiger coming on right after me. I want to remind you, if you're looking to get funded, Ola Prime is 35% off with the code A1Live. Okay, so take a look if you want. It's a great prop firm. And I don't think they have the consistency rule, which is pretty good, especially for swing trading. Thank you very much for watching. I will see you tomorrow. Goodbye.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams companies tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, everybody? Happy Monday. We are back. We're back, ladies and gents. I had quite the weekend. I had a wedding to attend. And I still have the dance moves, I got to tell you. We had probably the top 4 of us group just out there busting it the whole night. So needless to say, spent the day yesterday relaxing, sore legs and all. But hey, still got the moves. So it was a good old time. They took a lot of pictures. I'll probably see if I can squeeze out some pictures. But I told my friends, y'all got to quit getting married because I'm tired of going to all these parties. It takes it out of you, I tell you. But anyway, good stuff. And we are here for yet another week. So I'm still in that pound dollar short. I told you guys the other day, Friday morning, that I was debating if I wanted to stay in it. And I decided to go ahead and stick with it. So with that pound dollar, look, I got to be honest. I know that prices tend to bounce from zone to zone, just like I made the analogy on some other content I did, like a racket or a paddle. Okay, if you're playing ping pong or tennis or pickleball, just think of your zones as your paddle, volleying and pushing price from paddle to paddle, right? Supply and demand zones. So, had that early move down, feeling pretty good about it. And then we obviously had that positive news. This is a 4-hour chart, but we had that positive news start creeping in, thinking, oh, hey, we're close to that trade deal or close to that peace deal, only for it to get rebutted. So, again, and I kind of touched on this the other day, I do believe with you guys, I started looking at some supply zones above just to see if we could get some potential bounces down to help me out with this. So we did bounce into this one supply zone, this 30-minute. It did work a little bit, but it just chewed right through the rest of it. So now we've come up to this 1 hour supply zone here. And so far, this supply zone is keeping me in this trade. I mean, look, at the end of the day, there's unfilled orders over here. Now, remember, I got in the short over here on this candle. Okay. So I just want to see if I'm going to get some help. And sure enough, that's about where we started getting a little bit of help on this short. So pushed down, retraced. And then obviously today we have Tasnim news agency out of Iran saying, what exactly was that headline? They basically said Iran has stopped message exchange with the U.S. in protest against Zionist crimes, ladies and gents. So obviously the self-defense that we were doing, partly because of mines that potentially were getting pushed in with those speedboats, among a couple other things, has basically, pushed them to come out and tell us that message that we're not talking now. So again, that's the Iran side of things. Now it's just, this is just a repeat of the process, guys. It's time to wait and see what President Trump or Marco Rubio or somebody else has to say to see if that's in fact the truth or if that's just people pushing out agendas. I mean, who knows? But anyway, because of that, we obviously saw a drop in price, or I should say a spike on the dollar assets. Okay. So it helped my pound dollar and pushed it back to the downside again. So, and Nick does an awesome job of this, guys. Anytime we get reports come out or anytime we get a headline come out, I love, and I've stolen this from him, full disclosure, to where you just go and take a look, put your indices over here on the left with Bitcoin, more of your risk assets, and over here on the right, got your gold, your silver, your Dixie, and your oil. A little bit more of the the opposite side of the risk off. So risk assets, say risk assets, non-risk assets. But the point is, whenever we get these releases that come out or a major headline, it's always good to go see what's happening to the markets as a whole. 30,000 foot view, if you will. So you can see over here on the Dixie, when that came out, obviously the Dixie got a spike up. So again, it's helping my trade. Okay. But again, I'd be willing to sacrifice. I just want them to get a peace deal. Nothing would make me happier than for them to to get a deal signed and then just take away my unrealized gains. I'm fine with it. But the whole reason I decided to stay in this short is because it's just been inconsistent. you keep getting rebuttals on either side. So, yeah, news is legit. Yeah, exactly. Like, I hear you, Bashy. Yeah, the bonds 2 and 10. Yeah, yeah, the 10 as well. Yeah, the 10-year bonds. Where do I keep an eye on that over here as well. And there you go. You got your spike in the bonds. Okay. So it's not really a big surprise. And that's why I look at these assets over here and I do, you know, this is my 30,000 foot view list right here, guys. Right over here. Okay. The VIX, the Dixie, the bonds, the yields, oil, natty gas, gold, silver, Bitcoin, and obviously the major 3 indices, you know, just to get an idea. So, but anyway, yeah, so that's pretty much where I stand right now. Taking a look at the COT report we got obviously the other day, they did obviously sell out of the S&P, the Nasdaq. Guys, if you don't see Nick's videos over the weekend, you got to watch them. He does an excellent job of kind of covering the updates of the COT report with a very simple messaging. They bought, they sold, whatever the case is. So in this case, they sold. Okay? Got rid of some S&P. So we are getting some bearish looks right now on the Edge Finder. Now, does this mean because the S&P is giving us a -6 or NASDAQ's giving us a -5, does this mean we just go out and smash the sell button? Let's see. How do I put this? Not no, but hell no, right? Yes, they're going to Saturn. We already discussed that last week. They've already went to the moon. Now they're going past Saturn. Okay, as we speak. Do we want to stop that rocket ship, or do we need to let it prove itself a little bit? Yeah, I think we need to let it prove itself. So for me personally, as much as I'd like to short these things, the chart's saying no. It's just straight up and up. It's higher highs and higher lows nonstop. So at an absolute minimum for me, I need to start seeing some breaks of structure of the downside. So if we're looking at NASDAQ just as an example, let's break this. I don't know if you'd want to call this a major structure, but it's kind of got a little bit of resistance becoming support type of a look over here. So at least break this and start getting some more of this type of movement. I need to see a series of that before I've got any interest in shorting these assets and taking a risk. Okay. I don't want to fight the trend. And that's the 4-hour look. So obviously the daily look over here on the right, all the major structure is going to be all the way down here at 28,595 for NASDAQ, for an example. So breaking this structure would probably be the safest bet. Okay. Just looking at the reality of where we're at. Break this structure down here. It's a higher time frame, but at the end of the day, it's going to give you the best probabilities. Because nothing on the smaller time frames is really that strong, as far as I'm concerned. I would really want to see a break of that structure. It's a long ways to go, but we've seen how quickly things can rise. If we get any more, hey, how is this headline going to affect this? If there's no real rebuttals from President Trump or Marco Rubio, the Secretary of State, or some of the other major officials over here in the U.S., then that's going to be the lingering theme right now, is that they're no longer talking to us. Now they're probably doing their own thing behind the scenes, guys. We don't always get the full story. We just get news bites from legacy media, again, that are pretty well debunked here and there, or for the most part. So who the hell knows? But at the end of the day, the price action will tell us what to do. And right now, the price action is not telling me to short. Because you'd be basically, it's the opposite of catching a falling knife. You're trying to stop a rocket. So just be careful with that. Those headlines. Be careful with the biases that we're getting. Nick sets it up that way on purpose. Okay, fundamental sentiment and technicals. And right now, the technicals just aren't really speaking to us. Guys, let me know if you have any specific tickers you'd like me to look at. As always, guys, Nick does have his code, 35% off code, A1 Live for Ola Prime, olaprime.com. Go definitely check out the website. You also have the QR code there as well, and get the discount of your choice towards a challenge account or instant funded account, guys. They've got instant funded accounts over there as well. So definitely give them a look. If you have any thoughts, let us know. Okay. As always, you can find me at Trade Like a Tiger on all the socials. If you have any questions or just want to cuss and discuss, I'll be there for you. Okay. So anyway, just going back to the Edge Finder, we do have the Nikkei. We still have the New Zealand CAD up there at the top. It's pretty slim pickings on the bullish side of things, guys. Edge Finder is wanting us to sell everything. I personally am already in a British pound short, so I don't know that I'd be too excited about a pound Kiwi or a pound Swiss myself, unless I were to close it out and start focusing on that. Because at the end of the day, they are given a stronger bearish signal than the pound dollar. But the pound dollar is pretty, it's still pretty bearish. I'm not saying it's a weak score. It's a pretty good score. But hey, at the end of the day, I just don't really personally like the technicals on these two down here. Let's go look at that. Pound Kiwi, pound Swiss. Pound Kiwi. And hopefully I don't lose my voice on you today. I'm gonna try hard. I just got through creating some content earlier. My voice started to go dry, so I went and drank a lot of water. So I think we'll see if I make it. Pound Kiwi has just an awesome down move. I think Aussie Kiwi was down pretty strong like this as well. Just having a look at the 4-hour chart. So I like the technicals, but I also know that we did just recently hit a zone of demand down here from back here. Okay. And you can see the strong, it's actually a little smaller than a 4-hour, but the point is this zone of demand was pretty strong. Would you guys agree? I mean, it's just given us a big sharp move to the upside. So that's what you call strong momentum. We are coming into this zone that I have drawn up right here on a 1-hour chart. But at this point, this is just coming in too hot. I'm getting an alert on it as we speak. If I were not in the pound dollar, would I really want to short this? I don't know, because I kind of look at this whole area over here as just a little bit of fair value. It's a little bit, it's a little big of a range, but it relatively stayed the same spot there for that day and a half of intraday trading. So I kind of personally look at this as more of a fair market value. I don't like to short zones that are in or underneath fair market value. So yes, I put that alert here that literally just got hit live here on stream, but I just don't think that the probability of it is the greatest due to this and also due to bouncing off this zone. So for me personally, and not to mention the news right now that's just come out is kind of pushing currencies in all different kinds of directions. I think the highest probability move is to see if we get a push higher up, because I don't like taking shorts on zones or buys on demands that are in and around these types of fair market areas. Okay, it's a little bit of chop zone. So for me, I know it's a long ways to go and it may not make it there, but that to me would probably be a little bit of the higher probability move. Because we look at the daily on the right, and if we draw up our line just kind of showing trend, it's basically going to go something like this. Okay. So I know that's kind of hard to see. I'm going to move it so you can see it a little easier. Oops. What did I do? There we go. Let's get rid of that. Well, I'm sounding like Conway Twitty today. Yeah, we did a lot of singing too, by the way. A lot of karaoke while we were dancing. So that's another reason. But there's the reality of our daily trend. Lower lows, lower highs. And then obviously we're moving up now. So I didn't quite finish the true look of that. Okay. I guess we're basically looking like that. So long as this is our impulse leg, I'm fine with looking for the underlying strength. And I like to short above these swing lows like we had back here. So that's why I think that probably that might be, for me personally, the way I trade, the highest probability return, because we have a true daily supply zone along with a true, I do believe that's 4-hour. Let me double check. Yeah, 4-hour supply. So that's my confluence. Daily 4-hour confluence. It's a long ways away, but we saw how quickly it dropped. We saw how forcefully it bounced off this zone of demand underneath. So I'm not going to put it past it that it can't do that. Just get us a nice retracement all the way back up here for another possible short. Maybe the pound dollar takes me out. Let's just say the pound dollar gets closed. Okay. And remember, I moved it to break even. So I can't lose money on it. But let's just say it takes me out. Well, that's fine. I'll be waiting for something up here that's even stronger bearish, or even more bearish, I should say. Minus 13. Okay? You've only got 2 items going against the bearish narrative, and that's the recent GDP report, consumer confidence. Other than that, you have a lot of neutral items, but it's very heavily bearish because of the trend and the sentiment analysis. Okay. And then a handful of items over here on the fundamental side as well. So, yeah, I mean, yeah, I'd like this to turn around. I would really like this to turn around and just go back to the south for me and close me out. But at the end of the day, the worst thing I can do is micromanage this. I'm just going to step away, just going to let it alone and let it do its thing. Okay. So anyway, that's kind of a look on pound Kiwi, which is, of course, our weakest asset. Pound Swiss is a minus 10 as well. Well, double check and see how this one looks. This one's a little messier. I kind of drew up this little bit of a trend line at one point over here on the 4-hour chart. Looks like we have kind of pushed through it. We did push into a supply, but here's the thing, and I'll go to a 1 chart look for you guys. Okay, smaller time frame, 1 hour. Yeah, 1 hour. I do have a 1 hour supply zone, and you can see we've kind of chewed through it. At the end of the day, does this all look like one big fair market value area again? Kind of like what we just looked at on pound Kiwi. Yep. Do I want to be shorting in a fair market value area? Nope, not really. Especially when this leg out didn't even have the strength to get down to a major zone of demand before it reversed. See, this is off limits to me. And this is the joyless part of trading, guys, is sometimes we have to wait a long time for prices to go to our areas. So, you know, for me, the best spot's going to be clear up here where you see this daily 4-hour confluence. It's a lot of pips away, about 100 pips away. But similar to pound Kiwi, that would be kind of the play I'd be looking at. Because I personally, I don't want to be trading where retail traders are trading. I just don't want to do it. I want to wait for the extreme prices because that's typically where the banks and institutions are waiting on. Okay. There's a reason you get all these wicks, and I call it knees and elbows, but wicks and bodies, okay, just going up, going down, and just looking like an earthquake telemetry machine. Because that's retail traders. There's no real direction. The banks are stepping back like, let them fight. Let them have at it. At some point, they'll either move price to the zone that they're interested in, or they'll manipulate and push price there themselves, right? But when I see all this crap right here, I don't want to get involved in it. I just don't. I want to wait for the extremes. That's institutional supply. See this right here? This 1 hour supply here, this is more of a retail supply. More of a retail supply. I don't want to trade retail supply and demand zones. I want to trade institutional supply and demand zones. The extremes. Sorry, guys. I've had like 3 people calling me while I'm on here with you guys. Let me turn my volume off. So, yeah, just goes to show you not every supply and demand zone works. And that's typically the ones that don't work are the more the retail version. Okay. So that's why I've got no interest in trading this zone. Just wanted to look at it. I just like to see what happens. You know, I'm always gathering data myself to see if it's worth maybe putting in a small, tiny percentage of a risk on this thing just to try to take it back down to the swing low or the nearest demand zone. But yeah, I don't like it. I don't like that particular area. What do we got? What else we got? Yes, Bash, absolutely. Nick and the editor, they do a great job of throwing in some puns and some humor in the videos. It's the best. UJ, even worse. Let's look at UJ. UJ. How's my voice doing? Let me get a drink of water. I got 10 minutes, ladies and gents. Man, I tell you. Yeah, I don't know how to shut up when I dance. I got to sing, so it's not a surprise I'm losing my voice. Dollar yen. Yeah. Dollar yen is bouncing into a zone as we speak. So we are officially in the daily. Big expanded range candle coming out. Red volume spread analysis candle. That's what I like to see. By definition, we did have a little bit of a daily demand here. I just didn't draw it up. I drew this one down here because it also gave me that 4 hour inside when we dropped down to a 4 hour. I don't know. Maybe this one did too. I just didn't look. Let's double check. But either way, I will say, is this daily really that strong? Well, it broke all these structures here. It broke former resistance that became support. So that in itself is a little bit of a strength. And for me, I just wished it would have broken this confluence of demand zones down here. That'd be my only drawback. 161.25. I've been telling you guys for a while, for me personally, would be my favorite spot to get aggressive if we were trying to do an intervention trade. The intervention, just because that's where that weekly and daily zone confluence is from way back here, July 2024. So that white line right there, that continues to be my personal point of interest. Nothing would make me happier than to see somehow this thing give us a bearish bias if price enters this area. And this would maybe be one of my exceptions to my rule in, I don't even know if I should say this, but taking a chance at, going against the rocket ship going to the upside, or the opposite, which would be catching a falling knife. I don't know. That's still aggressive, but I think that would at least give us a little more of a probability that it would work out. Weekly, daily confluence of zones. Intervention levels being this 160, 161 level. Okay. Again, that was 161. It went all the way up to 162 this last time. The July 2024 look. That's a weekly chart. Monthly chart. Let's see here. Monthly chart. Okay. 159.5, or basically 160 back here as well. So it just goes to show you, and this is a monthly chart, and that's all the data I get. But you basically see where that 160, 161, 162 area is a pretty firm ceiling, dating back a couple pretty strong points on monthly charts. So, again, I think it's aggressive, and I've got a lot of friends that have been shorting up in this area, even though clearly it's uptrend, right? But I would at least understand, me personally, waiting for the weekly and then waiting for the daily inside of it. But as always, guys, let's see what the Edge Finder has to say about it when the price does get up to that 161.25 level. The weekly zone itself has already been tested right here. Okay, it's already been tested, and you've already seen what happened just from it touching just the weekly supply. We got that strong push. So now let's see what happens if and when it pushes up into the daily. Maybe I need to wait for a daily set of lower lows and lower highs to really get involved. I don't know. I haven't made that decision because I got to be honest with you guys. I've never actually shorted or traded intervention, right? So that's going to be news to me as well. But, I think it would at least be worth, it's definitely going to be counter trend. That's for sure. But it all really kind of hinges on what Edge Finder's telling me. Hey, is it close to a bearish look? If so, that might be the only way I would consider kind of going against the trend. So I don't know. That's just my thoughts. You're ready to 100 RR incoming. Absolutely, Bashy. 160, 160.7. Yeah. I mean, there's just, again, you guys don't have to agree with my zone. Okay. But I'm just looking at it from the filter of supply and demand, right? So that's where I'm looking. I haven't really even dug it down any deeper than to a 4-hour even. I just looked at the weekly. Because what would be stronger? Weekly daily confluence or a daily 4-hour confluence, which is my favorite. Okay. Weekly daily would obviously be the strongest. Monthly weekly would be stronger than that. So anyway, that's just my thoughts on the intervention side of things with dollar yen. And then you got to, easy as can be, swing low down here to target at the 155 area. So that's a good 500 pip range, from the, 600, I guess, 161.25. There's about 600 pips down here. So what else we got? I got a few minutes left, guys. Nikkei, we haven't looked at Nikkei for a while. Or at least I haven't. Yeah, see, it's going to Saturn as well. So the trend is obviously going to look pretty good. Daily over here on the right, 8 EMA, 21 EMA, pointing straight up. So we're good on trend. As far as 4 hour, actually, do I have a daily zone? Daily zone of demand all the way down here. So we're still a ways away from it. And yeah, there's your 4 hour confluence. So there's a little bit of a daily 4 hour confluence all the way back if it crashes at 60,087 area. That's why I drew this projection line up here last week. But as you can see, it's just continuing to break structures to the upside. So what's it created? It's created a new impulse leg, has it not? There's a little bit of a bullish impulse leg. Do I have any underlying strength in this bullish impulse leg? Well, number one, we broke structure. This is fair value. I don't want to trade at fair market value. So I don't want to really trade in this part of the area because you had buyers and sellers fighting and agreeing and cussing and discussing and pissing and all that right here. But this is an extreme. So do I have a zone of demand down here? Or could I even look at this? See, I could look at this zone here, but there's no volume. Volume spread analysis is a blue candle. No, thanks. That's not strong enough. Despite the fact it basically was created what's called a flip zone, guys. So we had this over this supply zone. Price comes up to this supply zone and fights it and creates another demand zone and has a bullish expanded range candle, the lefty gap. So this is what you call a flip zone. When we're talking supply and demand zone names, there's like 8 of them. There's a flip zone because what was a supply zone has flipped, became demand zone. But that demand zone was weak. There's no volume. So that's a -1 in my book. I like about everything else. So unless I can come up with another odds enhancer to convince me to trade this zone that created on low volume, probably just ignore it. But the point is, that's what's called a flip zone. If this had volume on this leg out candle, woo, that'd be a little more exciting. And as you can see, we came close to it. We came close to it. We didn't touch it. So now I need to see if there's any strength in here. Since this is basically where price dropped to based and said, nah, B, we're going up. We're breaking structure. All right, let's go to a 1 hour. Do I have a 1 hour supply with volume? Ooh, or demand, rather, sorry. Does this candle here count? I need to turn my magnet back on. Does this count as a demand? This is the true origin of this overall strong move up. Do I have volume? In the basing structure, yes, but the leg out candle, the volume started going down. So that's diverging volume, guys. We got price moving up while volume's going down. So I don't know how strong that is. Over here, it kind of recollects itself, pushes up again. Again, no volume. No volume, guys. I have to have volume. What about up here if I get a little aggressive? What about this zone here? It isn't a fair market value. I don't like that. But look at the volume. Look straight down at the volume on the leg out candle, red candle. On this green expanded range candle. This could possibly give a little bit of a bounce, despite it being in a 1 day's worth of a fair market area. And as you can see, what's happening? Bouncing in, getting a reaction. 15-minute. Look at the volume. Okay. That's price coming down to a zone of demand, and you've got unfilled orders left over. That's why we get the volume start pushing in. Okay. Not only that, but obviously you also had this news come out. So it's a bullish bias overall. The headline came out and it looks like it reacted weakly. A week again, risk off. Risk off. So when we get a risk off move, it brings it down to a zone of demand. If you're aggressive, that could give a little bit of an intraday trade. I don't know how much I'd want to put into it because we're at all-time highs. So even if you just took this as a simple, this probably won't even give us a 2-to-1, to be honest with you. Yeah, that's going to be about a 1-to-1. So that's just a little too aggressive, and it's not paying me enough. So even though there's a lot of volume there, I don't like the reward risk ratio on this, nor do I like the fact that we're pretty much trying to fight this fair market value area here, guys. So anyway, that is about all I got for you today. I hope you learned something today. And with that, yeah, I'm just going to keep sitting on my hands with these trades. Let them do their thing. Try to avoid the buy and sell button. Let them work out. Ping pong, guys. Prices bounce, supply to demand, and back and forth. So that's what I'm going to sit on. Ladies and gents, take care. I think, yeah, I'm ending the show today. Have fun, trade safe, and we'll be back tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.